Hi everybody, you're watching CNN Money Switzerland. I'm Ana Maria Montero, and this summer we are looking at mega trends, in this case sustainability, and how these are being impacted by the coronavirus. We are also, more importantly, looking at how we can leverage that pandemic experience for a more positive future. I'm joined today by Mirjam Staub-Bisang. She's CEO of BlackRock Switzerland. Thank you so much for being with us today, Mirjam. It's a real pleasure. Now, you are a champion of sustainable finance. I mean, you even published a book about it already 10 years ago, Sustainable Investing for Institutional Investors. And I assume it's a passion you brought with you to BlackRock.
That's right. Yeah, that's right. Big passion of mine, and certainly one of the reasons why I was hired into that position to not only lead Switzerland, but support BlackRock's journey to become a leader in sustainable investing.
Awesome. We will talk more about that in just a moment. But first, I just want to quickly take stock of what the crisis has been like for the company, generally speaking. So BlackRock is the world's largest asset manager with $6.46 trillion as of Q1 on assets under management. That would be March 31st of this year. But it was a drop of almost 13% compared to the prior quarter. What have you experienced here in Switzerland? Did you see a similar tumble?
Yeah, obviously that tumble in assets is reflective of the situation on capital markets as we saw it end of March, end of the first quarter. And we did see a similar situation in Switzerland. We don't publish numbers on individual markets, but what we saw in Switzerland, which is very much a market, an asset management market dominated by the wealth market, the private clients in Switzerland. And what we saw there is due to the deleveraging of private clients, margin calls is the word to quote. We also saw significant outflows as we saw across the world.
So you can really point the finger at COVID-19 in this respect.
Yeah, absolutely, because everything else is going really well and was going really well until the crisis started. What we saw, the situation with the assets under management declining is reflective of the situation on capital markets globally. And what we saw was a V-shaped recovery in capital markets, somewhat disconnected to the situation we observed in the real economy.
Which is interesting, right? I mean,
it's interesting, but not surprising when you think about all the measures we had by, be it by the Fed, the EZB, with all that money being pushed back into the economy, and that really supported capital markets. Also, the lowering of interest rates globally, that really helps to push asset prices up.
And how are you feeling about the second half of the year?
I'm positive, but I tend to be positive.
Generally.
I'm a positive person. I believe in capital markets, the health of capital markets, and also I believe there will be a recovery of the real economy if we get the virus under control. I mean, we see what this lockdown is doing, not only to global consumers, but then I think actually more importantly to global supply chains and how people suffer. I think that's an important aspect we must not forget. But once we reopen the economy, people will want to go out again and they want to consume, and that will drive also the real economy.
Now let's get back to your passion, which is, of course, as we mentioned earlier, sustainable finance. Do you feel like sustainable finance could save the day?
Couldn't save the day, but sustainable finance is not something that just popped up. But it's been an important journey for investors globally, and there has been an accelerated flow of assets globally, institutional assets, but also private wealth assets into sustainable investment products for a while, and really accelerated over the last 18 months. And I think what's interesting about this crisis, well, the focus prior to the crisis was very, very much on climate change and the environmental of ESG, environmental, social and governance aspects. Now with the crisis, there comes this focus on S, on social, because what we saw is that had a very strong focus on these S aspects, like strong consumer relations, some customer relations, but also a strong corporate culture and strong supply chains, resilient supply chains, actually proved to fare better in this crisis. So it's not that there's a shift away from environmental aspects in sustainable investing, but I would say a certain focus on how social aspects really matter to the resilience and the quality of a company.
And are you seeing that also here locally in Switzerland?
Of local companies, you mean?
Mm-hmm.
Like the local
are you also,
companies?
I guess, are you also seeing that shift happening?
On the investor side.
Mm-hmm.
Yes, I also see a shift on the investor side, especially private banks, the private banks I speak to. It's their clients that worry about again, the situation in the world, that worry about social aspects, health aspects. People realize how important health has become. And so for an investor, for a private wealth investor, it's quite natural to think about, hey, this crisis is terrible, but healthcare is important. Healthcare plays a very important role when you think about how to get healthcare to people in a situation as we encounter it right now. So there are investment themes that play a role, but also more generally, wealthy people didn't lose much money in this crisis. It's really the people who didn't have that much. It looks like they are paying the bill, and they will struggle a lot. So I think there's, on the one hand, this desire to help improve that situation on the one hand, but also to take advantage of investment opportunities.
How much of the shift is client-driven in your case?
I think here we need to look at private clients' investment behaviors versus institutional clients. I think with private clients, especially in Switzerland, sustainable investing was very much driven by private clients 10 years ago, 15 years ago. You had microfinance funds already 15 years ago in client portfolios. So in Switzerland, this trend was private client driven and was picked up by institutional investors a few years ago with this, with generally more regulation on such topics. When we look at institutional investors, there has been this question out on the fiduciary duty of institutional investors. And I see with institutional investors there has been a certain hesitance to fully adopt a sustainable investing approach, just because institutional investors are always somewhat worried not to do the right thing. And so I think the most recent crisis with the resilience we saw in sustainable portfolio will actually help institutional investors and their governance committees, their board of trustees, their CIOs to engage more deeply into sustainable investing.
So what I'm hearing is the crisis has actually really helped the cause of sustainable finance and investing.
Actually, yes.
Yes, okay. That's safe to say then.
Yeah, it's very safe to say that. And we saw in certain markets, also in Switzerland actually, but very strongly in other markets where institutional investors and private investors actually used the crisis and the drop in assets and the rebalancing they had to do to shift from traditional assets, conventional assets, into sustainable assets.
I always wonder, as an asset manager, who you manage in the end, you manage all other people's assets. How much influence do you actually have over that? I mean, if we know you, we know now that you are a sustainability champion, but how much influence can you have over investments, or none at all? Is that like the...
Well, influence, for us, for BlackRock, and for me, I think it's important that we offer choice. We show investors what they can do if they want to have, or if they want to invest sustainably, if they feel this is the right thing to do for the investment mandate they have. So I think offering the choice, offering a vast range of investment products, which be that thematic funds or just sustainable index products, that is an important aspect of kind of nudging investors to opt into sustainable investments. But I think it's also the advisory capacity that we offer when we speak to clients, and the research that we're doing in that area, and the research that we can show to clients and share with them and show them, why we feel it's a safer option and a better way of exercising their fiduciary duty, if they have one, as an institutional investor. I think that's an important role we play as an asset manager, but also as a client advisor in that respect.
And are you seeing also, are you seeing generational differences? I mean, do you see a younger generation of you're nodding your head, so I guess yes.
Yeah, no, we see that. Actually, our clients see that. When I think about our wealth clients, they see a strong demand from millennials to actually invest differently than their baby boomer parents would have or would invest. So what we see with younger clients, younger private clients that our wealth managers deal with, is that they have a very strong interest to make a difference with their investments and to be ESG compliance of some sort with their investments. What we see is that the millennial generations, they live differently, they consume differently, they work differently, and they will invest differently. They do invest with the money they have right now, but eventually we speak of the greatest wealth transfer in history that we're about to see over the next couple of decades. 24 trillion are expected to be passed on from baby boomers to millennials. And in that biggest wealth transfer ever, we will see millennials taking charge and bringing their values in the way they invest. On the institutional side, this is perhaps more rational. It's perhaps less values driven, but it's about fiduciary duty that pension funds, CIOs, and boards of trustees have to express, and they will invest more sustainably because it's the best for the long-term returns, long-term risk-adjusted returns for their beneficiaries.
Just going to broaden out really quickly and ask you your thoughts on the EU's Green Deal. Generally speaking, do you feel like this is just green wishing? How confident are you that this will really make a difference?
I'm very confident that this is going to make a huge difference because when I see what just the announcement of a couple of years ago, the EU Commission's Sustainable Finance Action Plan did to developments in asset management and finance, in the finance industry in general, people suddenly woke up and said, oh my God, there's regulation coming, we have to get ready for it. And you could see that in banks, in asset management firms, that executives started to become aware of this thing, sustainability and sustainable finance, and educated themselves and also their workforce on it. I think it's going to make a huge, huge difference because the way institutional investors will invest will be different. Institutional investors in Europe, they have to account for how their investments actually contribute to the climate goals of the EU. I mean, that's a huge deal. What gets measured gets managed. But also on the wealth side, any relationship manager that has a conversation with a private client will have to find out what the client's preferences are in terms of sustainability. What does the client care about? Do they care about social aspects? Do they care about climate change? Is water important to them? Gender, what have you? And then actually make sure that these preferences, these sustainability preferences, are reflected in the investment portfolio of the client, and then eventually report on how this portfolio relates to the preferences. So, the whole investment process and the whole advisory process will be driven or impacted by these sustainability considerations and preferences.
And what role do you think the financial industry can actually play in terms of the climate crisis?
I think the financial industry is absolutely crucial to this transition that we need to see. It's not that I hope to see it, we need to see to a low carbon economy. I mean, we can't go on like we did in the past, and we need the financial industry to finance this transition, be that financing renewable energy, but be that, and I think that's a very important aspect, be that helping brown companies become greener, financing the transition. There's this new instrument that is going to come into the market. These are so-called transition bonds. So these are bonds which are issued by companies which will eventually finance the transition and the impact on greening those companies and the impact they have on cleaner resources, less pollution, more gender balance, what have you, that will be measured. So I think it's actually the role of financing the transition to a greener economy. I think it's absolutely crucial. I mean, that's the role of finance. The role of finance is, to finance certain goals, and this one, is climate goals, sustainability goals, the UN development goals. I think it's absolutely crucial.
Do you know your carbon footprint?
I don't.
Okay, neither do I, but I thought I would ask
I don't,
you.
but I think it's probably considerably lower for the last 4 months than before.
Because you're home? Or you've been
home.
home?
I'm not traveling. I'm not flying. I drive an electric car, but I probably drive it less than I used to.
Are you planning on flying less in the future? Or do you think?
Work-wise, I think we're going to fly much less because, especially in our company, we've seen how well that works. With working from home, everybody was doing video conferences. So I think there will be more of that in the future. So less requirement to fly for a day to London or for a couple of days to New York. I think less of that will be necessary. But frankly, I think human interaction will still be important. I think you can go on with virtual interaction for a while, but every now and then I think it's good to see someone face to face.
Agreed. Okay, and then to wrap it up, I actually want to look back a little. 1 year ago, the company saw its biggest reshuffle in a decade. You came on as CEO. So it's been a little over a year now. If you take stock of this year, what kind of review would you give yourself?
I came in from the outside. I didn't know the firm. I came in from a more entrepreneurial role before, and that was a tremendous change. But I'm very proud of our achievements, the achievements at the firm, and the team here in Switzerland. I think we've done a tremendous job, and personally, I'm so excited to be part of that journey of BlackRock becoming the leading sustainable asset manager, and to have contributed to that. So that's exciting.
I can imagine that, again, you already started the conversation 10 years ago or before with your book. I mean, such a feeling that now, does it feel like finally now, people are embracing this thing that I've believed for so long?
Yeah. I mean, you say it so well. It's like this sense that finally we're here. This has become mainstream. We don't have a single client conversation where sustainability is not, I would say, at the core of the conversation right now. We've been waiting for that for a long time. So this is exciting.
Wonderful. Thank you, Mirjam, so much for being with us and for your insights. It was a real pleasure.
Thank you.
And to all of you watching, remember you can find all of our content, including what you've just seen, online. cnnmoney.ch is the place to go. And you can stay in touch with us via all of our social media platforms. Thanks for watching. Take care, and we'll see you next time.